So let's start out with the big question, which is the analysts got it wrong. Why? Did you underperform or did they overestimate?
David, thanks for having me here today. We're very pleased with the results, not just for the fourth quarter, but for the entire year. With respect to the investment community, we're talking on $20 billion for the quarter, about a $30 million disconnect. We can point to some one-time events, specifically in our medical device unit, where we had some elevated sales in Q3. So I wouldn't say anybody got it wrong. I think it's just solid performance across all three of our segments.
So correct me if I'm wrong, Jeff, but it looks like really oncology and immunology help drive these numbers. And I know that Alex Gorski specifically called them out, how well they're doing.
Yes.
How much are they driving your results? And are you at all concerned about biosimilars and generics eating into that?
Yeah, so that's a great question, David. In terms of oncology and immunology, we've got great scientists there that for better than a decade now have been bringing just transformative medicines in immunology, specifically around psoriasis, Crohn's disease, ulcerative colitis. So we point to products like Tremfya in psoriasis. I think it grew 55% year on year comparatively versus the fourth quarter of 2018. That continues to show best-in-class data. It was the first IL-23 out there. With Stelara, we're addressing patient needs for Crohn's disease. It's a debilitating disease that has tremendous uptake, but actually had its start as a product with psoriasis. So we continue to expand that portfolio with oncology. Imbruvica and Darzalex continue to perform extremely well, moving into front lines of therapy, so more patients are getting treated earlier, and we know that's the best diagnosis in terms of, or prognosis for better outcomes. With Darzalex, we're particularly excited about a subcutaneous formulation that we hope to get approved sometime around the first half of this year. That will take the infusion time of 6 hours down to about 5 to 10 minutes for patients, and we think that's just a big advancement for patient convenience.
Yeah. All really good news for Johnson & Johnson and for its shareholders. But what about the biosimilars? What about the generics? Are they on the horizon? Do you see any threat coming up in the future to some of that leading in immunology and oncology?
So we have had actually an impact from biosimilars this year. It was about $2 billion incremental to what we experienced in 2018. So we've been dealing with biosimilars for a few years. We had a number of products that faced loss of exclusivity. So we had biosimilar and generic competition. So David, the great results of 5.8% growth that you see from our pharmaceutical unit was in spite of a $2 billion headwind. So we have dealt with it. We will continue to deal with it. It's an important part of the system. As we come up with new transformational medicines, we want to make sure, as all good healthcare companies do, that there's room for those to be available for patients. And so having generics and biosimilars as part of the equation in terms of overall healthcare costs is an important part.
As CFO of Johnson & Johnson, I know, Mr. Wolk, you are always looking at your portfolio, what you want to add, what you want to take away. As I understand, you referred to possible deletions of underperforming businesses today in the earnings call. Do you have any nominees? And just as important, perhaps, because I suspect you're going to say I'm not going to name any companies or any lines of business. How will you judge that? Is that margin? Is that operating profit? How do you judge whether it's underperforming?
Yep. So we look really with a mindset of being number one or number two in the markets in which we play. So do we have that level of innovation, that level of execution that ensures that we are well positioned within the markets? And if we're not there currently, we want to make sure we've got a real good game plan. When those plans don't come to fruition, and sometimes they don't, we'll look to see if we can create value for shareholders by doing something else with that asset. Similarly, though, we look to add where we can. We can complement our business. About 40% of our growth over the last decade has come from inorganic opportunities.
And finally, Mr. Wolk, talk about the donut hole, the so-called donut hole Medicare. We hear about this a lot, which, as I understand, is narrowing, and that's costing companies like Johnson & Johnson some money. Can you put any numbers around that? How much is it costing you?
Yeah, I won't put any specific numbers around it, David. What I can talk about is pricing in general, and we understand why that is a topic of conversation for the past couple of years, and certainly as we head into an election year here in the U.S. Overall pricing for Johnson & Johnson's products over the last 3 years, have declined. And the average on that is about 4%. So that's not a cumulative number. That's 4% each and every year for the last 3 years. We know the White House of Economic Advisors came out with a report recently recently said that pharmaceutical pricing has declined in its most recent study. We need to get more of those discounts that are being generated for insurers and governments into the hands of the patients who need them most. People are walking into their pharmacies on a monthly basis, paying $50, $75 for a copay when they used to pay $5 and $10. We need to make sure that that's addressed so that these great medicines that are coming, not just from Johnson & Johnson, but across the industry, are available to patients most in need.
You mentioned drug pricing overall. In your projections going to 2020 and beyond, are you putting anything in your numbers for possible legislation on Capitol Hill? Because a lot of people are talking about something maybe even this year.
Yeah, we see continued pricing pressure. As I mentioned, with Johnson & Johnson in the industry, we have seen price reductions over the last number of years. We continue to see that trend. It usually is around some of the more competitive spaces. If you think about diabetes drugs, if you think about psoriasis drugs, where there's a lot of competition, just as a free market economy should work, you're going to see price negotiation a little bit more intense.